Our world is changing and our investors are demanding more. Our industry needs to make sure we are delivering what our clients want. How can we make money for our clients and do the right thing for the world? Being a large investor of capital, we have a duty and an obligation to do the right thing and improve our society.
Schroders is entrusted with $500 billion of assets for clients in over 30 countries, which we invest for the very largest institutions and for retail investors all over the world. Schroders' purpose is to create a better future by investing responsibly for our clients. As an active manager, we invest in companies for the long term, and to do that we need to have a real eye to the long-term growth and capabilities of those businesses and their ability to sustain that growth for the future.
We have a sustainability team that was established over 22 years ago, which is dedicated to identifying long-term structural trends and leading engagement with the companies we invest in to improve their business practices.
Climate change is fundamentally a longer-term issue, but we know that we're going to have to start acting now.
One of the challenges with climate change is you can't go back to the last time temperature rises hit current levels. You can't go back to the last time this played out because financial markets weren't too developed many millennia ago. As a result, we've had to think very hard about how do we think about the implications of climate change for us as investors.
We've looked at the risk management techniques to think about the medium-term transition impacts. And we've also developed innovative things to try to find those sectors that are really going to grow.
So our starting point is to say, what will those changes be? What are the things that need to be done to get us to a low carbon economy? For example, carbon prices will need to be significantly higher. For example, we will need to see an end to fossil fuel consumption over time and a gradual phasing down or reduction in fossil fuel consumption over the coming decade. Our analysis focuses on the question of how will that play out? What impacts will that have within industries, within companies, and within the profitability of individual companies we invest in? And how do we think about managing, measuring that risk at a portfolio level and at a company level to make sure we're preparing today for the risks that will emerge in the future?
We are working with clients to help them along this path to becoming better sustainable investors. And there are three primary ways we are doing so. We have innovative tools that help our investors understand the risk and opportunity, and we are able to take sustainability and put it into quantifiable terms for our investors.
What the Climate Progress Dashboard does is it tracks where we are now and shows you what the future could look like. And it points across a number of areas on how far they have to shift. And that gives you a really good idea of where the inflection points could be and when some of these impacts move from being theoretical to actionable for our portfolio managers.
The UN has set out 17 Sustainable Development Goals, which I think has become a global language. And I think if we can all align our reporting and our efforts around that new language, we'll be in a position to have greater clarity. We need to put emphasis on measuring the impact of what it is we do, and that for me is a big source of future investment for us. A lot of people ask what the purpose of financial markets is. I think it's very hard to understand what real impact you can have through financial markets. One of our microfinance institutions lent to Mrs. Sorum, who used to collect rubbish on the rubbish dumps of Phnom Penh. And in Cambodia, there's no way out of that. She borrowed $50, bought herself a wheelbarrow, started collecting rubbish direct from stores. She then borrowed another $150 to create a little recycling area. Today, she's rehoused all 13 of her family. She employs 6 people. She makes a profit of $4,000 a month. She's broken out of the poverty trap. Today, with still 1 billion people in the world earning less than $1 a day, and if we can help through small microfinance loans, those people break that cycle, then that is financial markets having a real impact. And that's the bit that gets really exciting, when you actually go to the real details, saying there is a way out of this through proper, sustainable impact investing.
As well as looking at sustainability on our investment side, we also have a number of sustainability initiatives internally. So one of the ways that we're mitigating our carbon emissions is reducing our travel budget by 1/3. That means encouraging employees to fly less and to use the in-house technologies that we have to build relationships and to only fly where necessary. We have over 5,000 employees globally, and if we're able to create those behaviour changes to have a more positive impact on the environment, that's something really powerful. Last summer we organised an awareness campaign around single-use plastics. One of the things we did to help educate employees about the negative impact plastic is having on our environment was to create 4 turtle replicas made from single-use plastic collected from our London office. Our colleagues in the New York office decided to run their own campaign and also created their own internal video trying to educate their employees to do the same.
Climate change is one of the biggest challenges and opportunities facing society today.
For the first time, Generation X is now outpacing the millennials in believing that all investments should be incorporating sustainability principles.
When you move beyond sustainability to impact, you change the culture of investing.
The mission is not about saying the right thing, it's about leading by example and truly proving we are making a difference.